As the price
Yes.
goes up, people want to get involved. That's all that really matters. I know people care about technology and blah, 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 but it's all in the price, right? I don't think people really understand where the flows are coming from. So if we take the Bitcoin ETF, and I don't know when this was, the last, I think it's called a 13F filing by the SEC. You see these large funds and investors, and they have to list their biggest positions. And so you saw who owned how many shares of the Bitcoin ETFs. And what you saw near the top of the list were funds like Millennium and Citadel and Point72. And these guys are hedge funds, right? They don't believe in Bitcoin. They don't believe in anything. They believe in making money.
Arthur Hayes, former BitMEX CEO, believes the state of the economy will have a huge impact on cryptocurrencies. He points out that money supply, not price, drives growth, and expects additional money printing to boost Bitcoin. Arthur Hayes also emphasizes Ethereum's potential when interest rates move, with traditional banks embracing cryptocurrencies for profit, resulting in market growth. Hayes argues that the quantity of money, not the price, promotes growth. Cutting interest rates focuses on pricing, but credit dollars issued by central banks and governments have not increased considerably. The recent rate drop had a limited impact on cryptocurrency due to the poor money supply. He anticipates that policymakers use quantitative easing, greater bank lending, or government borrowing to support the economy. China's central bank has lowered policy rates, potentially injecting fiat cash into global markets. We will now watch clips from the interview to gain further insights into Arthur Hayes' discussion. Please like, subscribe to our channel, and turn on post notifications for more exclusive content. Enjoy the video.
I'm of the school that believe that the quantity of money is more important than the price of money. Obviously, when you cut interest rates, you're focusing on the price of money, and the quantity of money. By that, I mean sort of like the number of credit dollars that are being emitted by banks, central banks, governments, what have you. That hasn't really increased that much. The Fed's targeting its policy rate. And yes, the crypto market has been a bit buoyant after the September 18th cut. And to your point, probably hasn't been as, I guess, exciting as people would have thought. But I ascribe that to the fact that the quantity of money, at least the expectations of what that's going to be, haven't really changed. And so we're going to need to see whether it's the cessation of the Fed's quantitative tightening program, restarting of money printing via quantitative easing, more bank loans being given, or increased government borrowing, or the U.S. Treasury running down its checking account with the Fed. There's various ways in which dollars can be emitted into the financial system. I do believe those are coming in time, because I believe the effects of these rate cuts is not going to be as much as the authorities would have hoped. And if Kamala Harris continues to trail in some of the polls, they'll have to do more to get the financial markets higher on election day, which means more dollars coming out of the Treasury, the Fed, the banking system. But one area where I believe fiat liquidity is waiting to explode into the global markets is obviously in China. And we've seen since the Fed has started cutting rates, the PBOC, People's Bank of China, has cut a raft of different policy rates. So I believe the amount of fiat liquidity created to attempt to reduce the volatility of this, cataclysmic, seismic change in the way that economies are structured is going to dwarf any money printing event that we've ever had, which is why I believe Bitcoin can hit $1 million, Ethereum, I don't know, 10, 20,000, whatever the number is, but it's going to be crazy because we saw what happened during, the first pandemic of this century, how much money was created to try to lock everybody in their homes. Well, what's going to happen when the United States is being dethroned by a bunch of other countries and they have to share power? Do you think they're going to go quietly into the night and just accept it? Or print as much money as they can to do what they can to forestall that situation? And the balancing factor is Bitcoin. We love volatility. We love the natural state of the universe. The authorities hate it. And so as they print more money, Bitcoin and other cryptos go up in value. So that's where I believe the real bull market starts. We saw sort of a preview of that, sort of the banking crisis in the US in March of 2023. Bitcoin's up 3x since then, right? They haven't stopped. Republicans, Democrats in the US are printing money. European Central Bank is printing money. China eventually is going to have to print money to stop the deflation in China. Japan has never stopped printing money. So, it's only going to get worse in terms of the amount of fiat going around the world. the banks don't hate crypto. They just hate that people like me and CZ make money on it. We're not the typical sort of people who are involved in traditional finance. They want a cut of the fee pie. So now that Larry Fink has a cut of the fee pie, the Bitcoin ETF was his most successful ETF launch ever. And they're the largest asset manager in the world, right? Of course, he's going to be on every single mainstream financial media touting Bitcoin because he's making money off of it. So as all these banks have crypto trading desks, they have products to their high net worth individuals, they have savings products and all these sorts of things, they're going to love crypto because as long as you keep your money with them, whether it's in a dollar or it's in a Bitcoin derivative, it doesn't matter because they're making fees. So yes, I think BlackRock is just talking its book. They want you to spend money with them. So they're going to tell you how great Bitcoin is. I know people care about technology and blah, 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 but it's all in the price, right? If more and more people are willing to transact in this thing and believe it's worth, what, 64,000 or whatever it is at the time we're filming this, and it's what, $1.5 trillion asset class in terms of, just looking at Bitcoin, for example, it makes sense why traditional banks are now interested. They can make money off of it. It's big enough where they can, put their highly paid employees trading it, selling it, structuring products for it. So it's all about the price. It has nothing to do with their belief in self-censorship resistant.
According to Arthur Hayes, Ethereum is appealing because of its vibrant developer community and cutting-edge applications. However, interest rates have affected its performance. Ethereum's yield will become more competitive when interest rates shift, making it a more appealing internet bond. In his analysis of Bitcoin ETFs, Hayes also described how hedge funds took advantage of a profitable investment. These funds are selling off their ETF holdings as this opportunity fades, putting pressure on the market to sell. According to Arthur Hayes, it is an unwind of profitable trades, not a demand issue. Hedge funds' interest in Ethereum-based exchange-traded funds, ETFs, is now restricted due to its lower basis yield. Hayes expects reduced stakes in Bitcoin ETFs and cautious engagement with Ethereum ETFs until market conditions improve. With interest rates continuing to fluctuate, Ethereum's value proposition will become more apparent. Let's go back to the interview and watch more clips to gain insights from Arthur Hayes.
So number one, it's the most robust ecosystem for sort of a decentralized computer. It has the most developers. It has the largest trading applications. It's the first place where the vertical defining applications are launched. We do a lot of investing. If I think about the things that are new and innovative, they start on the Ethereum network and they're copied on other networks. Now, that doesn't mean that it's the best performing coin this year. I think that post the merge, whenever that was last year, the year before, we went with this narrative that Ethereum is an internet bond because it has an endogenous yield related to the staking yield, which has been about 3 to 4% in ETH. So that's a great narrative. But Treasury bills, U.S. Treasury bills, in terms of fiat asset, the safest asset you can own, because the U.S. government will never go bankrupt in its own currency, those yield 5.5%, and they have for the last year or so. So if I'm a yield conscious investor, which a lot of people are, I can make 4% in ETH. I can make 5.5% in dollars, right? And obviously ETH has a volatility and a price risk attached to it. I'm perfectly happy to make that 4% if the price is like zooming higher, but if it's like flatline or slightly down, why would I take that risk? And I can earn more money on a risk adjusted basis just by being in T-bills. So I think Ethereum has been harmed from our interest rate situation. That's changing, right? So the Fed cut 50 basis points. Reverse repo now is 4.8%. I checked yesterday. It's expected that the Fed will cut another 25 basis points in November. It could be more, who knows? And so the forward curve for Fed funds is going to be dip below the staking yield, in some point in the next 12 months. And so on a forward-looking basis, Ethereum looks like a lot more appealing as this internet bond. And so I think you're going to start to see ETH awaken again as people are like, oh, okay, 4% is not so bad in a world where I think the Fed's going to go to zero within the next, 18 to 24 months. I don't think people really understand where the flows are coming from. So if we take the Bitcoin ETF, and I don't know when this was, I think it's called a 13F filing by the SEC. You see these large funds and investors, and they have to list biggest positions. And so you saw who owned how many shares of the Bitcoin ETFs. And what you saw near the top of the list were funds like Millennium and Citadel and Point72. And these guys are hedge funds, right? They don't believe in Bitcoin. They don't believe in anything. They believe in making money. And so Bitcoin, I bought the Bitcoin ETF and I sold a CME futures contract that was a 20-30% per annum yield. That's called the basis trade.
Yes.
And so on a risk adjusted basis, that's a very attractive trade because these guys go out to their investors saying, I'll make you 8 to 10% a year with very low volatility. So if I'm already capturing, 5-6% in, a few month period, just by putting on a delta neutral, meaning a risk neutral trade in Bitcoin, I'm going to pile into that. And that's what you saw. You saw these funds put on massive positions. However, that basis has come down and it, reached somewhere in the low single digits this summer. I think it's around 6 or 7% right now. So they're in profit. They've made a great risk adjusted return, and we've seen them in the spot market unloading the shares of the ETF. I'm talking about Bitcoin here. And so I think when we see the next filing, we're going to see a lot of these funds that were number one a quarter ago have reduced their positions materially because they were unwinding this basis trade. So it has nothing to do with about demand for Bitcoin, but obviously every day people on Twitter are posting, oh, look at the net inflows into the ETF, and then understanding why that's happening. So when we moved to Ethereum, which was launched during the summer, and the basis yield in Ethereum was very negligible, meaning buying Ethereum and then shorting a futures contract, especially when you eliminate the staking income, then there's not really a reason to put on this trade. And the CME Ethereum futures contract liquidity isn't very good. So if I'm a Millennium, if I'm a Point72 or one of these portfolio managers in one of these pods, this is a bad risk adjusted trade. Therefore, I'm not going to be as incentivized to buy the ETF.
Arthur Hayes reveals that lowered rates could lead to extraordinary money production, which will help Bitcoin. Hayes stated that traditional institutions are adopting cryptocurrency for profit. BlackRock's successful introduction of the Bitcoin ETF shows this. Meanwhile, Bitcoin reached a big milestone when it surpassed the 21-week exponential moving average, EMA, of $60,500. This scenario has prompted market observers to speculate that Bitcoin is entering a parabolic phase, defined by a fast price increase. Analyst Elja believes that this phase will push Bitcoin above $115,000. In contrast, Rect Capital believes that Bitcoin is on the verge of moving from the reaccumulation phase to the parabolic upside phase. Sharks and whales also increased their Bitcoin holdings, supporting the rising trend. According to Sentiment data, $4.08 billion worth of Bitcoin has been purchased in the last 6 months, demonstrating strong investor interest. Furthermore, spot Bitcoin ETFs have had a significant comeback, with $500 million in liquidity, encouraging market confidence. Market watchers are keenly monitoring Bitcoin's price trend, anticipating the next leg up. The combination of technical indicators and investment activity paints a positive image for the new cryptocurrency. While market volatility remains a concern, the current trend provides a solid platform for future price increases. Analysts will continue to watch important indicators like moving averages and investors to understand Bitcoin's development better. What implications do you think Arthur Hayes' predictions on increased money printing and shifting interest rates will have on the cryptocurrency market, particularly for Bitcoin and Ethereum? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching, and don't forget to subscribe.